Happy Friday, traders. It's 8 a.m. Chicago time on Friday, the 6th of March, 2020. This is episode number 1707. Thanks for joining me again. It's been a busy couple of weeks. Another week's behind us. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The President of the United States just signed a bill providing for relief for coronavirus. I believe, let me see, I believe it's 8.3 billion or something like that. It passed through the House and the Senate very, very quickly. Um, Although he just said a minute ago that he doesn't know if stimulus is needed, although he just signed a bill that would provide some support. Um, he also just said that the Fed should cut and stimulate. So that's I believe it was 8 billion or 8.3 billion. There's a huge shortage of testing kits, and there's a very high probability that many more people are infected than we know. Uh, so the market overall is in a bit of a tizzy this morning, mainly because there are over 100,000 cases of coronavirus globally that we know of. And the number is not so big given the globe, but the number has risen very dramatically day by day. And so that's causing the market to move to safety. So this morning, uh, this morning we see the bonds up huge. The bonds are up four handles. This is massive for that product, that big a product. Four handles and 24 ticks, almost five handles in the bond futures. This is pushing yields down. Yields around the planet are moving down as money's moving into treasuries. That money's got to come from somewhere. That money's being pulled out of equities. Gold is likely to pop higher, probably break through the 1700 area. Gold is trading 1675 and 40 cents, up $7.40. The 10-year note is up a handle and 8 ticks. And crude is taking a beating. Crude's taking it on the chin today, down 4%, 4.27%, or $2, trading at 43.94. 43.94. Uh, and so this is very interesting. Also, yesterday out of the repo market, I saw somebody reporting that the uptake on what was being offered is quite poor in the repo market. So there's a caution there's a caution flag that's being thrown up by banks as well. Um, this I'm not trying to cause a panic here, but this is pretty serious stuff. We have not seen this kind of extent of we had a big issue in 2008, 2009 that started in 2007, and that was supposed to put in a generational bottom. But that issue unfolded in a way that allowed for a nice long runway for authorities to step in and do something about it. This is kind of this has transpired over weeks, and it's accelerating. So the market's responding in a way that would be expected. The Euro Stocks 50 are down 131 points. That's 3.9%. The DAX is down 441 points, 3.7%. The Nasdaq's down 285 points off of settlement in the futures, 3.3%, and the S&P 500 is down 92 points or 3%. Allocation is clearly to safety. It's hard to say what it's likely to do this morning. The non-farm payrolls came out and were strong. The number came out at 270 something versus 175 expected. And so it's 273,000 versus 175 expected. Prior revision to 273 from 225, and the market still sold off. It's interesting to see that. I mean, we beat by almost 100,000 jobs. There's an argument on the quality of these jobs, and a lot of these jobs are being taken up by fewer people, so to speak. People having multiple gigs to make ends meet. So that's where we stand in terms of what is on the schedule. And by the way, the unemployment rate dropped to 3.5%, expected at 3.6. And the balance, U.S. balance of trade, was came in at 45.3 versus 45.8. So all good numbers there. The economy uh, seems strong, but things are a little bit shaky in terms of news. Um, let me grab the shoot. I had the price limits up this morning, and I did away with that page. Here it goes. The S&P price limits for the day session. For the night session, the S&P limits were very, very close. The limit down number for the S&P overnight session is 2874. The low is 2915. We're about 40 points away. The limit down figure for 7% for the day session is 2813 and a half. That's 100 points lower. We may well see that today. Then there will be a circuit breaker, and then the market will go back into a netting environment as soon as we have a bid and the market bounces. The next price limit down will be 13% from settlement. People mistakenly think that limit down prices are from the open. No, everything in futures is referred from settlement. 13% down from settlement gives us 2632 before the next circuit breaker. And then the market would have to reopen, net out, reopen, look for bids, and then it would reset to 20%, which is at 24.20 and a half from settlement, 24.20 and a half. If it hits that, then we basically shut down. We're lock limit for the day. Haven't seen that ever. So we'll see how it rolls, but again, I'm not trying to cause a panic here or dramatize what's going on, but this is very, very unusual behavior. And I would recommend, again, as I did earlier in the week when things were moving around quite a bit, I would recommend that folks just don't trade. Go leave your money in cash. Make sure you're at a good clearing firm that is well funded. This is where having a well funded clearing firm matters. If you have questions about that, you can contact me at futurestrader71.com/contact. I'll type that in here. An underfunded, customer seg funds are something that is required by law, but it has limited protections. So just if you have questions about that, just reach out to me, futurestrader71.com/contact. Let's move on. What is scheduled? What's remaining for the day? We've hit the big numbers already. Fed's Evans is speaking in about 10 minutes. Fed's Mester is in 10 minutes. The Fed speakers have been talking about the potential for an adjustment as a result of coronavirus. We have Fed's Williams at 2 p.m. Eastern, Fed's Rosengren at 2 p.m. Eastern. We have Fed's George at 3:30 Eastern. And then this evening at 10 o'clock at night, we get China balance of trade, exports year on year, and imports year on year. Those are high impact figures. And that's where we are. Again, probably not a good environment to trade a small account. And again, I'm going to advise you that there is significant risk of loss trading futures. We want you to be here. We certainly don't want you to lose more than the value of your account because futures are a derivative and a leveraged product. You're trading on margin. You can lose a lot more than your account value. And that leverage works in both ways. It compounds our wins, but it also compounds our losses. And if you don't have enough to cover one, the full exchange margin per contract, which is about $7,000 per contract in the ES and about 700 bucks per contract in the micros. If you don't have that in your account, please do not trade. Do not trade, because if you put an order out there and something happens to your platform, your internet connection, or whatever, you can find that by the time you come back on, the market has moved 110 points or 120 points. It is just not smart. Okay. So just stand aside. Quick review of yesterday. Here's what I expected yesterday. Yesterday, I did not. I'm not doing scenarios these weeks because it's pointless. The higher time frame is in play. But the scenario yesterday was a push up. I'm expecting a responsive market up to 70 to 75. This low volume node right here, and then I expected it to roll over, and the target was 3,000 that's circled here, and that's that's exactly what we got yesterday. I found to be a pretty good read, a pretty easy read, um, and it did what was expected. I believe the low is 29.96. So again, a push into 70, 75, and for the market to roll over and look for 3,000 below. Here's what it did. Here's what it did. It pushed to 82. 75, 70, 75 was the expected resistance zone, and it went to 82. So that's where I expected it to go. That's the sell zone for me, as I talked about. And then I looked for it to roll over and go to 3,000 right here. So that was pretty much spot on there. It's not always spot on. And the goal is not to guess it and gloat. The goal is to have a plan for when the trade actually materializes so that we can hold on to winners a little bit better with a little more confidence, knowing that the market is proceeding as expected based on the context of what we've done so far. You can see that the ES has been actually in balance for a few days. So we have basically put in a low at 28.53 and a quarter last Friday, and have been responding back this entire week. The entire week was a pullback type of trade, and then today it's breaking lower. The question now remains on a big picture, and we'll look at the composite in a minute. The question now is, do we have a lower low for the continuation? And the continuation, if we do get through, is expected to push down to 2740. 2740 is the next big target down for me on a bigger picture, on a kind of a swing basis, and that would be the continuation trade. But so far, you could see that we've balanced out pretty good. We're below the MC point of control of this region, and we are trading down here. We're trading. The template day is last Friday. Pay attention. It is a balanced day. We may see a response in the day session values here. Um, 2880 or so, but not likely. This is likely to precipitate down and push pretty strong. What was interesting about yesterday is, even though we pushed up and sold off into the 3000, the delta remained positive. Now there are several reasons for that, but we can see yet again there's a conflict between price and the delta, which makes me a little bit suspect. But this could be the hedging portion, or the hedging function of trading futures. As the market drops, they're lifting the offer. The aggressors are lifting the offer on the way down, and so on. So that's where we stand. Here's what we've got in terms of order flow. So looking at ctbookmap.pro, it's been a heck of a night. Oh, there's a fast market right now. There's some latency in my feed. Um, it's been a heck of a night. We've dropped quite a bit. Earlier, we dropped before the non-farm payrolls. Non-farm payrolls are right here. Did not trade it. We popped higher on the higher number, and then we are selling off now. The overall liquidity in the book is just very poor currently. There's hardly any liquidity in the book. We do have a collision here at 29.10. We're seeing liquidity where we would expect it at 2,900. There's some at 2,905, another strike price. I'm sure that somebody's hedging something on a weekly here, probably, or a monthly in 2 weeks. And there's quite a bit going on at the 2,900 here. I expect that the market is likely to continue to push lower. If we go deeper with the real-time market depth here, we can see 2880 is next. I want to remind you, price limit down on the day session is 2813. There's quite a bit of room before that happens. Okay, so that's where we stand. Let me switch over to what we're expecting for today. I want you to, of course, it's like Friday, but you know, I don't really care about that right now. The market's just too volatile right now. But if you want to take a moment and hit the like button, I'd appreciate it. Here's what we're looking for today. Actually, let me step back a minute and show you the overnight session. The overnight session, this is a 180 point range chart, 180 points, and we are squeezing. We've got a double distribution profile overnight. We have pretty good volume, 780,000. Two distributions. And so we have a very clean and clear cutoff area at 2960 or so. It's actually extending from about 2952 to about 2970. This area here is a big area if we pop higher, which is not expected. We have a very nice distribution, very orderly, very nice distribution through the range, and now we're breaking lower. We had a weakish low earlier, and we're pushing into 2,900. So not much to glean from the overnight session except that, you know, in the 2952 to 2970 area, and I know that's used to be a whole day's range. Now it's about 5 minutes of trading. That area is of interest to me. Looking at what we're expecting for today, given where we are pushing up against the low here, the overnight low. Actually, one more thing I wanted to cover, very important. Um, the composite, the composite. So what the market has done here is it has bounced to about 50% of the entire sell-off, the all-time high at 94ish, 394 all the way down to 853. The mid was about 31.25. We went to 37 on the Fed announcement, which was just an excess spike, and then are rolling over. So what happens now? What we're looking for now is it has pushed through the mid of this push up and is pushing through. So the question becomes, does it break this low, or does it come back, put in a higher low, consolidate, and start to squeeze higher as the situation looks better in terms of COVID-19? The volumes have been pretty decent, and the range has been pretty decent as well. So it's a continuation of that theme, and the expectation for today is a very likely open drive lower to push through the 2,900. I'm expecting an open drive lower, and then I expect it to consolidate and stabilize below 2,900 by a little bit to 2,880, 2,870 before the bounce. And I'm looking for it to bounce a little bit and consolidate before the afternoon. It sells off into the weekend as there's a lot of uncertainty. This is what I'm looking for. The expectation is a very, very, very low probability of a gap zone fill above, and I'm going to look for opportunities to sell the key areas to sell against 2943, 2952, 2971. Those are areas that I'm interested in. Again, 29.42, 29.50, 29.71 here. These are areas that I'm interested in selling against, and I'm watching the order flow, which is actually very, very quick and very thin, so harder to read in this environment to find those entries. The VIX is screaming and continues to scream that buyers are just getting are likely not going to get their way. So the VIX has spiked up yesterday and has turned over and it's trading was trading at 39 and 39 yesterday when we closed and has popped higher overnight. The regime is favorable to sellers today, but we do, given the way the auction works, once we do find that buyer, I'm not going to argue with the market. I'm going to let it kind of do its thing and move up. But overall, all indications are that we are not seeing very good participation. I'll show you the volume scope or the footprint. Hard to see the footprint because the numbers are so scrunched. But what I'm interested in terms of the footprint is how the footprint is printing and what the deltas are, how the participation is on these bars. And you could see that there's some serious selling going on, that overwhelmingly the selling is getting not only price rewarded in price, but it's also getting the delta going for it. Okay. You want to give money away today? Trade a small account and over leverage and go and just fall for your emotional response and FOMO. You want to be here for when the volatility calms down enough for this to be a bit more of a sane trade. Then just watch and learn. And the current auction is as pure as we can see it in terms of the speed that it accomplishes its tests. It's a good time to be a student of the market rather than a participant. I wish you well. I wish you the best, and I wish you good risk control and a happy weekend. I'll catch you on Monday. Take care.